Hey guys, how was your Monday?
Hey Scott, what's happening? Steve, how are you
Yes.
over there today? Happy Monday.
Yeah, happy Monday indeed. I am well.
Yes,
Ready to go.
indeed. Happy Monday. And welcome everybody to another edition of the Office Hours. Today is July 20th. July is almost in the books, coming up fast. So welcome. I'm your host, Jamie Hodge. Got my trusty wingman, Steve Gomez, in here as well. So before we get started, just want to make the attorneys sleep a little bit better in these webinars as investment advice. Everything that we share with you is for educational purposes only. If you do need investment advice, what to buy, when to sell it, all that good stuff, please do yourself a favor and find a registered. Everybody know about the community that we fostered around the award-winning tech that is TI Pro. The trading room, hosted by Mr. Barry Anderson, up here in the left-hand corner, is a fantastic resource to use. If you haven't been using it yet, but why not? Cool thing about our trading room, other than the fact that it's hosted by Barry, is that it's free. And you don't even necessarily have to be an active subscriber to get in there and participate in the room. If you shopped around on the web, you know that most trading rooms are, well, the ones that are worth their salt come attached with a price tag, okay? And that's not the case with us. It is free for anyone. So get on in there and use that resource. We got all kinds of people in there, traders that are just starting out, all the way to seasoned pros and everything in between. Of course, today's Monday, and you get myself and Steve for office hours. And Steve's going to take the steering wheel for tomorrow for Trade of the Week. I saw that Trade of the Week was off to a good start there, Steve. Andy Lindlop is going to ride shotgun with him. And then Wednesday rolls around. We like to change it up just a little bit. We bring in our founder and CEO, Mr. Dan Merkin, along with our Chief Technical Officer, Brad Williams, always entertaining functionality coming down the developmental pipeline. Andy's going to take the helm for Thursday and round out the 5 p.m. Eastern webinars, and I ride shotgun with him with Trading Studio, and then a session starting every Monday through Friday at 12 p.m. and going until 1 p.m. Eastern. So this is a great resource. Any trade ideas related question, if I can get to the next slide here, this is the bookmark, Trade-I 2016. The very beginning is when we first introduced the Holly 1.0 module. Since that point in time, we've added 2 additional ones, Holly 2.0 and Neo. And you can see here, working, people are receptive to the technology, and more importantly, they're getting good use out of it. You guys are getting good use out of the product. That explains why our user base is expanding rapidly. And boy, it's going to be interesting to see what that orange bar looks like come the end of the year here. Still got about 6 months to go, or maybe not quite 5 after this month is over. In any case, things are very good presently. In addition to that, those metrics of user accounts growing rapidly. Also too, our Brokerage Plus module, which allows you to trade through interactive brokers using our interface. Live orders as well as demo orders are continuing to stack up. Record month last month for demo and live orders. Well on pace to finish this month with another record, and we'll see how we finish up here. But once again, translation. People are using Brokerage Plus with their Interactive Brokers account. Not to say that the Trader Workstation is all that bad, but it's just that Brokerage Plus is a lot more intuitive, allows you to not only implement your own strategies through auto or manual mode, but also the AI as well. All right, here we are to today's content. And of course, keeping with tradition, going to kick it on over to Steve and let him talk about the major indices and the market action that we had today. So Steve, if you are good to go, I'm going to kick it over to you.
Done typing over here. All right, so the cup and handles, which is super, super bullish. I think a day is, or maybe a week or two before we get here. And it's just like remind people that it really doesn't matter what the Fed's do. This is one of the craziest correlations or non-correlations or decoupling, you think, or what you know, I'm not as happy as what the next shoe to drop. And not only that, after a shoe does drop, the market just continues for sure. All things tech and find a bit of nastiness afterwards, moving on the course. I'll take a side note here, aside from technical analysis and markets, runaway markets, and how they come to that. But I'll tell you what, across the room, he just pulled 10 pointers tipping you. So analysis, and reached out and been chatting with my nephew pitcher. Why is that important? Because he's in sports. Why is that important? Because he's probably seeing Dave Portnoy, everybody else getting interested in the market now that the stock, starting down it's just when they start coming out of the water there, that's going forward. I'm just conductors. The baton gets shifted. Worry about when people
rolled over, right? What we were all joking about is when it's right. They were like, when the shoe shine boy giving you stock tips, that's a bad sign, right? Well, back in the 2000 era, it was more like your cab drivers and whatever. Recently, it's probably like your Uber driver, right? Or anybody that typically is not giving out stock type information. That
normally would.
when those
when they're tuned
play,
in, when they're tuned in, get ready to make some decisions. But nonetheless, the price action speaks for itself. So that's all I got.
Absolutely. And I was just trying to knock out some questions here before I took the helm back here. Regarding, there's some questions coming through about, hey, if that's a broker deal of 25K in there, I think.
Exactly. Yep.
T+2. So you can't use that money over and over again. But if you have more than 25K in your account, well, you can make as many trades as the broker dealer. So, we don't set the rules as far as how many trades you can make. That's all regulatory stuff.
And that's margin too. That's assuming margin, like Joshua points out. Cash account, you can do whatever you want. You're not using credit leverage.
Correct. Okay, so I think we're caught up now. Let me know if I need to touch base on anything else here. And I do believe you can see my screen. All right, moving right along here. As Steve already kind of sketched out the broad strokes on the bigger indexes. Everything's fine and dandy. The term zombie market, man, the zombie is just, the zombie is pretty hard to handle. Usually we're gonna have a little bit of down. Price action is really all that matters. So we did have that small gap down today, only to get covered, and then we trended higher for the rest of the day. Here you can see the SPY on the 5-minute intraday. I didn't really get a whole lot of information as far as my expectations went this morning. Oops, I guess that'll be all right there. My compare count window that I typically like to consult, that sometimes gives me a little bit of an edge as to the direction of the market. These were the readings that I got after the first 15 minutes. And, whether this was 52% green, in this case it was 52% red, when I see a bias one way or the other of less than 55%, I just kind of go, raise my hands and go, you know what? I don't know which way we might be headed for the rest of the day, because it's not enough of a bias to really get me excited. I need to see 55% or higher. 52% bullish today. Futures were red to the downside a little bit all night. That's kind of where we opened. But the bottom line is this: when I see a reading of this nature, I just go, you know what? Anything is possible. And as Steve pointed out, the zombie market kind of acted like it was going to go down in the first 5, 10, 15, 20 minutes before we put in this little bounce here. And boy, a nice little V bottom on the intraday, and then a nice slow grind up for the rest of the day. So didn't get a whole lot of information for my compare count window today, and that's okay, because a lot of the times it does me a lot of good. Just can't knock it out of the park every day. And then we have Holly to discuss here, and a pretty interesting day from Holly. So let's talk about Holly. And when we're talking about Holly today, we're going to talk about some of the opportunity that presented itself today. Plucking a little bit of spread between moderate and conservative spread. What used to be risk off versus risk on, now it's called moderate versus conservative spread. Actually, I have those mixed up there. Should be conservative, moderate, but I think everybody gets my drift there. Then we had a good example of a trade around, a little bit different than our typical trade arounds go. The NTX in a moment. And then we're also going to talk about PI. PI was the big winner today. All right, if we take a look at the Holly all trades blotter here, and I've got it sorted by moderate profit right here. You can see PI posting the biggest gain today. Now, I'm kind of glad this happened today, because it hasn't really happened in a very long time, and it's going to tie into when we're using Holly in an automated fashion, okay? So let's just talk about that one right off the bat here. And what I'm going to do is pull my brokerage plus over here. Well, come on over. There we go. All right, so here's my brokerage plus screen today, and I was automating Holly in paper mode today. And if we look down here, and I'll just get my drawing tool, we're going to be checking out moderate profit because my settings here are the same as what we have over here. And what do I mean by that? Well, I'm going to click on over to my Holly AI tab. We're going to right click and take a peek at my long and short trading instructions, which are exactly the same. And we're going to be focusing on the way I'm managing my risk. $100 per trade. So the system will automatically, we only lose $100. And this total right here is looking at the same type of a setting. So in order to show you that, I'm just going to quickly go to my TI toolbar, go to Tools, Options, AI Trade Size. You can see I've got the same setting right here, risking $100 per trade. So, you know, Steve, I'm getting more proficient with my drawing tool. I'm just a little slow with it. So when we look over here at the toolbar, you can see Neo coming in the red, 2.0 in the green, and a little bit of red on Holly 1.0. Of course, we got aggressive mode up here, we got aggressive mode here, and we've got moderate mode with Holly Neo right now, all showing the best performing risk modes for those specific modules. Now, when we look down here at moderate profit, you're like, wow, $620.07 on a total of 12 signals that we had over here. But look at my total right here, okay? I was doing the same thing. I'm only up 150 and maybe only got up a maxing 620, so why the big difference there? Well, a couple things to point out today. Number one, we had a dual signal in QFIN today. And so take a gander at my trade count right here. I'm only showing 10 trades, and we got 2, 7, we got 12 Holly signals over here. So where are the other 2 trades? Well, first and foremost, the QFIN was a double signal right here. So we had the first one was a long signal about 5 minutes into the open, and then we had a short signal in QFIN, and that was about 20 minutes into the open. Now, since I was already long QFIN, well, Holly ignores the second signal. That's the way it's set up to do right now. If we were using one of our own strategies, we have the ability to check the little box that says, go ahead and put the trade on even if holdings exist. But over here on the Holly AI, when we go into the trading instructions in the AI, that might be coming down because I think that is an option that should be available in case somebody wants it, in which case it would have closed out QFIN long right up here at the top where it got short. But of course, that functionality is not available yet, so it just kept me long. So that's a -1 trade right there. That trade's not going to show up. And then at number 2, since I'm missing 2 trades here, was PI, okay? And we've talked about this a lot in the past. When you're running automated strategies, whether it's Holly or whether it's some strategies that you created, sometimes you just don't get the fill. And I got to tell you, most of the time I get my fills, but today was a classic example of not getting the big winner. And when I come over here to my trading instructions, I'm using a pretty aggressive delta. And what I mean by that is if we focus down here, you can see I'm running limit orders, and I'm saying let's do a limit with a delta offset of -8. That means when the signal price comes in on the alert, it's going to take that price, it's going to add 8 cents, it's going to throw my bid out there. Most of the times, I'm getting fills. This is the first time in a very long time I didn't get a fill. More importantly, it just happened to be the biggest winner of the day. But sometimes this happens when we're doing this type of trading, launching our statistically weighted algorithms, and you get everything, but you don't get the big one. And that was today's a classic case of that. So I'm glad it happened because it's a good real world example of not getting the big trade. So it was just a fast market when we check, get out of here real quick. When we take a peek at the chart here, you know, here was the original buy signal right here coming in at 30.47, and my bid went out a little bit higher than that, 8 cents, and the stock had just moved too fast So my bid was out there, but it never gave me a back and fill. All right. So unfortunately, I did not get the biggest winning trade today. Also, if you were automatic, of course, we're always like, yeah, I don't want to, but that's good real world experience. A lot of the times we can look at our slippage here. So if we take a peek at MIME right here, our simulator does a very good job at adding slippage. So in essence, PI missing that trade today, it's a very good real world experience, even though you might be trading a demo, because every once in a while it is going to happen in a live environment as well. So if we look at MIME here, my fill price was 42.17. The AI got 42.08. So that's actually good. I took 9 cents of slippage in MIME. I didn't make as much as the AI, but I almost made the same amount, okay? If we take a peek at DT here, what do we have? A fill price of 42.85, another good slippage metric here, another 9 cents of slippage in DT, and still a nice winning trade. But the bottom line is the PI was just moving too fast, didn't get the fill, price had already moved past mine, didn't back and fill. So once again, a good real world experience there. Big difference, tack on about 350 bucks to here, you'd be closer sitting to 500, and that would have been a pretty good day. Of course, even on the commission structure over at Interactive Brokers, you're still plucking a little bit out here. Just didn't get the biggest winner today. So wanted to point that one out first, and now we're going to talk about MIME and DT, because those are good examples of getting a little bit of this spread here. Get my drawing tool turned back on here. So MIME and DT, we're going to be looking at these two right now. Notice the value in conservative is less than the value in moderate profit. MIME 116.73. What time frame was I in here when I marked this one up? I forget. Okay, there we go. All right, so MIME coming in about 43 minutes after the open with a nice little buy signal right here at 42.08. Statistical weight being brought to us by Holly. So kind of early on, but we got Holly and her statistical weighting behind us. We get a nice little move up, all right? Nice immediate gratification, which is what everybody likes. Sometimes these stocks that Holly spits out will kind of ebb and flow around the entry line. Not this one. Just gyrates up nicely and then takes a little break as it plateaus out here and starts a little consolidation type sideways movement here. Now, why did Holly get out of this one? Well, the timed exit hit. If we take a peek at Sunrise Mover down here, you can see this is one of the shorter hold times that Holly comes to the party with, a 30-minute hold time. So Holly just did what she was programmed to do, plucked out somewhere right about there in that candle. And this is with a 30-minute period after the entry sign, certainly not anywhere near the stop out line, so it's working. We see Holly getting out, and we have to question that for a minute and go, based on what I'm seeing right here, is there really any reason for me to get out of this one right here? Could have given it just a little bit, and then we get this sideways consolidation here, and then check it out. Let's see how many minutes, 1, 2, 3, 4, 5. So about an hour and 15, hour and 30 minutes after the original signal, we're up nicely. What's this secondary pattern forming up here? A little consolidation, setting up for a nice little range break right here. So if we were patient with this one and we didn't just bail out with Holly, we could have seen this little consolidation over the following hour and said, hey, if it gets up here and gets through this, this opening range with a nice tight consolidation, this is a great time to add to the position. Nice add opportunity right here. So if you took 100 or 200 shares with Holly, could have doubled up right here and enjoyed the rest of this uptrend. Also, what I like to point out is how it, stayed nice and well above this 10-period moving average right here. Never really getting a little bit weak until about 45 minutes into the close, right, or before the close right here. So just a nice strong stock in MIME, an excellent opportunity to add to that position. And, as you move along with this process, when you see Holly exiting and you're thinking to yourself, well, should I take more risk than Holly and stay in this one for more? A lot of the times it's just unclear until we see a secondary pattern emerging like this, when we're just seeing these 3 green bars. Of course, we can always go back to the daily and try to sketch out, well, how much room might we have over here until we run into a little bit of potential supply. Or we can just really simplify it and do what I like to call the 50-50 methodology right about here. If you're not sure, it's always a good idea. You can't go wrong by peeling out a half of your position with Holly and then setting a break-even stop on that second lot, therefore ensuring a profitable trade. If it would have happened to have rolled back over, we made money on the first lot, we got stopped out for a flat here, but a regression to half here, kept the other half, and then enjoyed the rest of the uptrend there. So great opportunity there in MIME, not only to extract a little bit of the spread here, but also add to the position as that secondary pattern was emerging there in the form of an opening range break. All right, Steve, I see that questions panel flickering over there. Before I move on to the next one, anything I need to talk about? All right, looks like you got them all answered here. All right, so now let's take a look at the DT. And I think I was on a different time frame for this one, so let's back up. Stops, so that if we're wrong, that is the level that we're willing to endure before we finally have to punch out, take our medicine, and admit that we were wrong. So DT, right off the bat here, we get a little bit of downside action. Not near as pretty as MIME. MIME just went straight up force. DT, kind of the exact opposite. Throwing a little fit here. As soon as we get long, it gyrates down, gets to within basically 5 or 6 cents of the stop area, but does not get stopped out. Finds its footing and then retraces back up. And this is what I was talking about earlier. Just kind of hugs that entry level for a good period of time here. And since I went to 5-0 weeks, as we saw on the MIME, just took a bit, maybe not that much longer, but just took a little excursion to almost the stop out area, and then emerges here, another range break. So if we were able to stick it out with this one, we could have easily saw this secondary pattern emerging, and that was a great add opportunity for DT as well. So, Holly got a little jittery. Why did she get out? Reduce risk. This is a common exit strategy by Holly sometimes. As soon as the trade stops going in the direction that it was intended, in this case long, Holly pulls the plug right here. Not when it was down here, but right about here, and takes that small loser there. So the same rationale, the same methodology applies. If we weren't sure, could have peeled out a half with Holly, but seeing her exit right here, we've already seen this bottoming wick be put in. So I don't really see any reason to have exited with her at this point in time. We could have held the whole lot and then identified the secondary pattern emerging, and we could have chose to just sit with what we have or add to the position here, and that would have been a good decision. Okay, so a couple of good examples about how to extract a little bit of this spread. Of course, as this is happening in real time, the spread is not there. We have to make the decision in real time based on what we see happening on the chart. Did we hit the stop level? Did we get close to it? Or in the case of MIME, never even got close. So a couple of good opportunities there for extracting conservative profit and moderate profit spread. And now let's talk about X. And what I mean by that is we would see a long, kind of similar to what we saw in DT, come down here and tickle that stop area. All right. So actually DT would not have been a bad trade around, even though it didn't get stopped out. When we saw it getting close to that stop area, and then we see these green bars being put in, we could have caught this one a little bit cheaper than what Holly paid for it after this little wick had been put in close to the stop. Then we get this green candle. That's always something you need to pay attention to, because we could have gotten a better price and then the thing worked to the upside. Now this one is kind of the exact opposite. This was a long play. We got the buy signal way up here, and then quickly, let's look how long we were in the trade here. Not even 5 minutes. 8:39 entry time to 8:44. Quick, we see Holly getting in, then we see her getting stopped out very quickly. And then when we see things getting stopped out, what I recommend is paying attention to how the thing acts around this stop area right here. So notice after we had this big red bar, we got tried to get back above it with a couple of wicks, but clearly the sellers kept it down here, and then we're below the stop level, okay? From this point on, wasn't having it, okay? For a good while here, we had plenty of time to react and go, you know what? This stop area is now acting as a supply area, okay? Couple of fights here, and then down below it for the rest of the duration here. Could have given us a good edge here, a good tip off going, you know what? This stop area is not acting like some of the other ones that I've seen where we bounce below it and then quickly wick back above it. This one is keeping it tapped down. So when we see a trade like this emerging and we see that that stop area is acting as, in essence, area of short-term support, we could have easily taken the other side of this trade and went, you know what? Can't get back above that stop area. The stop came very quickly, less than right about a 5-minute stop out area. We see this area acting as supply. You know, we could have taken our sweet time here and went, you know what? As soon as this little level right here gets breached, maybe I'll take a stab at the short side, or maybe somewhere up here. Plenty of time to react to this one. Wouldn't have been a huge mover. Somewhere, let's just call it 88.45, potential down to 85.77. So this doesn't look like a big deal right here, but it was almost a 3-point down move from the levels that we see here. So just keep that in mind. You know, sometimes Holly's timing can lead us to a good trade around. So this one was going in the opposite direction. Most of the time they're going with the direction, but this one just stuck out like a sore thumb today, and I haven't seen very many of these lately. Most of them will go down and tickle the stop area, then regain some traction above it, but not this one. This one acted in the opposite capacity, but that pivot area still acted as a nice area of short-term supply, presenting a good short opportunity. All right, let me take a look at my cheat sheet here. Yeah, I think that's about it for Holly today. So all in all, Holly didn't overtrade, didn't undertrade, just kind of hit a nice little trade count, which was just right. All right. Just checking out the questions panel one more time before we switch gears. Okay. Now, Ron, we don't necessarily, well, a user guide on setting up the AI trade strategies, but yeah, Steve's going to drop a link in there.
How to hook up.
Yeah, the setup instructions. But when it comes to, you know, specific trade instructions, like how big of a delta you should use, it's kind of up for interpretation. All right, so gold and silver. Boy, gold and silver have been, you know, gold's right up there, hanging out close to new highs. Let's pull up the gold chart here. Here's the daily. You can see just pecking at new highs. Silver pecking at new highs. I think silver is dancing with 20 bucks an ounce today, and I think it's still right around that level. Interestingly enough, I think back in either 1907, 1917, somewhere in that area, take a guess at what the silver price was. It was about 17 bucks, 18 bucks an ounce. And here we are in 2020, it's just cracking 20 bucks an ounce. Interesting to say the least, but the bottom line is this: a lot of opportunity in these gold and silver mining stocks as of late, and the action is definitely heating up. Are we going to stay up here and then go back down? Are we going to run for a while? Unknown at this point, but I think I have to concur with you on that, Doctor. But the bottom line is, it's probably a good idea to keep an eye on some of these things, whether it's the price of gold and silver, or whether it's some of the major miners that actually take the gold and silver out of the ground. So what we're going to do here is we're going to go through creating a watch list for those big miners using our single stock window. And then I've also created a neat little top list that is nice and simple that you guys might have an interest in watching moving forward. Okay, so how are we going to create that that custom list there? Well, just pick one of the big gold miners, right? So I type in NEM, Newmont, one of the big miners, and then what I would do is I would just come on over here and click on similar. It's going to show me a nice list of all the other stocks in its sector. All right, so It's real easy to grab these symbols and throw them into a custom list. All we have to do is pull one of these, but notice when I'm in the single stock window for some reason, if I try to just grab the symbol column, it's gonna highlight everything. So here's a neat little trick. We're just gonna right click, we're gonna pop it out. Same exact top list, but once we have all the symbols visible, then when I grab the symbols list, it's just gonna highlight the symbols. That way I don't have to go through and edit out all that other information. Once you've highlighted the row of symbols, it's easy just to hit Control C on your keyboard, and then we pop these guys into a custom list. Tools, symbol list. Now you can see here, I've already done it, gold and silver mining. I'm just gonna create a new list just to show you guys how easy it is. We'll just call this one gold, silver. You can see my empty list there. I'm just gonna go edit, and then all I have to do is hit Control V, tuck those guys away. And now we're gonna type in one of the silver miners, okay? Now I've got this list, so I'd go through the same process here. Gonna pop it out. Just gonna grab these guys in the same fashion, not near as many as the gold, but Control C. I'm gonna pop back over here into the list. We're gonna scroll to the bottom of the list, get one past it, hit Control V, and now you can see 47 gold and silver miners are in there. So here is a top list that I'm going to drop into the chat panel. Simple. And by the way, I'll go ahead and drop this list in there too, in case you don't want to have to go through and copy all the things just like I showed you.
That's a good idea, but good to know you can do it that way.
Yeah, but I wanted to show everybody how easy that is. And you know, when you're in here, it's going to highlight all the rows. Just pop it out, then you'll have the ability just to grab these single symbols here. But what I've done here is I've constructed a very simple top list. Okay, and if we go into configure, well, let's look at the columns first. Change in the 5-minute, change in the 15, 30, 60, and 120. Now, when we go to these change filters, you'll see that we've got other time frames available. I just try to pick 5, 15, 30, 60, try to put a little spacing in between the time frames. Of course, we're going to have the 2-minute, not a whole lot of other time frames in between there. So I did a pretty good job at just spacing them out here. But the theory going on, well, as you watch these metal stocks, might be a good idea to keep an eye on the ones that are up in all time frames simultaneously. You know, you hear a lot of people saying, well, you know, as long as I have confirmation on multiple time frames, that's good. So I figured that would be a good way to sort these moving forward. So just listed all these in column format, and then just said in the configuration, they just got to be up. That's why I've got the small setting of 1/10 of 1% in the 5, 15, 30, 60, and 120 minutes. And this is going to be kind of be up for interpretation, okay? Because once you start pulling these stocks up, if they're up in the consecutive time frames, you might find that it's just a nice trending stock. And of course, always like to consult this 10-period moving average here. And these are just the stocks that were on the list at the close. Of course, there are going to be some more thinly traded stocks in there. When we see a stock like this, you know, we just know,
Filter
well,
it.
I know how to I know how to ignore it. We can go through here and we can place a little bit of filtering in there to get rid of the thin ones, just like Steve said. This list isn't going to be jam-packed all day, every day. I'm just more of a proponent of not putting any volume in there. And if I see a stock like this, I just disregard it, right? But if you do want to add some filtering criteria, by all means, go in there and do that if you'd like to eliminate them. But you know, these are the stocks that were on the list towards the close. So depending on how this list is gyrating in the live market session, you know, keep in mind it's not just something you should jump in and buy. You're going to want to take a look at your favorite time period, whether that's the 5 or the 15, see how it's looking on the daily. But typically the ones where we're up in all of these time frames are going to be the stronger stocks. But once you load this window up, you might find that, hey, some of these are good for continuations, or some of these are showing me an emerging pattern that I can identify. You know, like for example, BVN. If we would have saw this one somewhere right around in here, we could have went, ooh, if it gets up here and cracks through, it's going to be a move higher. Depending on market conditions sometimes though, maybe we were getting exposed to the stock right here, in which case, we might set up for a nice pullback. So this is going to be, kind of up for interpretation as you watch it tomorrow moving forward. But, trading is subjective. Steve likes to say this all the time, and it's just about exploring new ideas and watching things that are strong in these time frames. I think it's going to point out some good opportunities for everybody. So what I'm going to do here is just copy that. We're going to drop that in. Let me label it here real quick. Up on multiple intraday time frames. Or we could just call it strong on multiple intraday time frames. And we'll drop that link right in here. Okay, that one is in. And as I said earlier, it's really easy just to copy this whole list, drop it in the chat panel for you guys as well. And I think that list should be in there. Yep, there's the list. Should be able to highlight and just simply copy and paste the list. And then of course, don't forget to point the window to the list. Once you first add the list or create the list, when you come in here, it will not be visible as a checkable box. You have to hit the add existing list button first. Come down here and find it. Once you click on it and make it blue, it's going to show up over here automatically, just like what I have over here, gold and silver mining. Now, there's one more thing I'd like to point out. We do have a metals channel over here, and it's got a pretty cool top list already in there. So let me just go ahead and drop this one in as well. But this one is easily accessible from the metals channel top list, but it's a little different. And I'll point out the differences here. It's just going to give you more stocks to look at because it's not just looking at the mining stocks. So when we come in here and go into configure on this one, you're going to notice it's got several lists attached to it. Copper, nickel, lead, and zinc mining, gold, ore, and silver. So basically just about all the metals, iron, but also forging and stamping. Whereas the list that I just created and shared with you guys is only going to be looking at the major gold and silver miners. If you want a little bit more flavor and you want more things to look at, you might want to keep this list up as well, which comes directly from our metals channel. It's the main top list. In there, you're just going to have a lot more things to look at. This one's been on my radar for a while now. NAC, nice little run. Would have been nice to get some down here today at that pullback level of $1.80, finished nice and strong, but I've been watching that one under 2. So anyway, plenty of gold, silver, and mining stocks for you guys to keep your eyes on for tomorrow with the custom list and the up on multiple time frames, as well as this one. All right, and here we are with about 10 minutes left here. Steve, looks like you've been doing a good job getting all the questions answered here. So that's about all I got today. So Scott, if you're ready to walk us out, share a discount code with everybody, I think it's just about that time.
It's on my mute button.
There you go.
Use earnings layout. It's a good and podcast wherever you listen to your pods, and add us as a subscription so you catch the next one. And also check out the ones we've released this year with the interview series. It's been pretty insightful, good stuff. Some of it talks about our new upcoming features, and some of it's just some interviews with some industry people that give good insight. There is a code, summertime. Use it for 15% off your first month or year of Trade Ideas. You can also use this to get an upgrade from standard to premium and save on that also. So jot that down and use it soon. You can follow Jamie. He's on Twitter at QuantBot. Steve Gomez is at Today Trader. We've also got at Trade Ideas. And Trade Ideas Pro is the Facebook handle to follow there. Share everything we post with your friends. info@trade-ideas.com is the place to send all your questions. That goes into our help desk software so it doesn't get lost and gets routed to the appropriate team member The recording of this webinar will be up later on tonight or tomorrow, and you get an email tomorrow with a link to help you find it. Thank you, Jamie and Steve. Have a good rest of your Monday.
Hey, thanks everybody. Thank you, Scott. Thank you, Steve. Thanks everybody for popping in. We'll see you tomorrow.